Good morning. What's up, everybody? I got to get a quick audio check. Good morning. Good morning. What's up? Born ready. He says, oh, man. Duolingo to 260. Is that happening? Here, let me get a audio check. Audio check, 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 check. Looks okay. I got thumbs up. Okay. Cool, cool, cool. All right. Ready to roll. Happy Monday, everybody. Looking across the market. Looks about all I see, to be completely fair, is hoodie. but no, I mean looking actually pretty good in the morning, super early pre-market. Just caught a glimpse of that. Let me turn my phone on silent here. But yeah, I think we got some stuff to cover. We got a little bit of pullbacks here. I think we're off the highs, opened at the highs, unless you're hoodie or Microsoft or some of the others. A lot of headlines to get through, but welcome. If you guys are new here, give the channel, give the video a like, subscribe to the channel. What we do here every Monday. No, Amit today, he's sick. You lie. The guy's never sick. Is he sick? All I know is I think we're gonna be on tomorrow, as far as I know. But if he's sick, it's got to be bad, because that guy does not take a day off. What's good? No, I didn't switch up the office. I actually this is HQ2. The other one's HQ1. I mean, it's similar off. The other office is still there, but you can tell where I'm at based on the color scheme. Essentially the same thing, just kind of like reversed. But oh man, he didn't do the open. Oh, he's slacking, my guy. We gotta have to text him. OMG. All good though. We got a lot to get through, so big week ahead. If you guys are new to the show, what we do here every Monday is we kind of look at really quick, like what are the main headlines that we need to that hit the tape over the weekend while we were gone? What's going on in the market right now? What's going to affect our trades throughout the following week? And what do we have to look forward to? I'm a trader first and foremost. We do a lot of investing, but and we mix a lot of fundamentals with the technicals as well. But this show is mostly about where are we going to go in the very near future. We can take a look at some stuff longer term, but for the most part, this is immediate. So most of the stuff that we look at today is basically going to be like what's happening right now, live in motion, and what's moving the market. And this week we have a very big week. This week we have a Fed announcement. We have the FOMC this week. So let me go ahead and start this off. What I'm going to do is I'm going to share a screen really quick. We do this little thumbnail. So it's FOMC week. Do you guys remember that? Big week ahead. Tesla dropping a lot this morning. We'll talk about that. So the things that we look at, if we're talking about something like Tesla dropping this morning, look, we're going to talk about that. We're going to talk about why. So today you guys are going to find out why things are moving the way they are in the market, how we need to watch them moving forward, and what's happening in the broader trend. That's what it is. So it's a big week. So 90% probability cut. I don't know if you guys caught this. This is very real. So 90% probability rate cut. FOMC week. Check. Right? Does it ignite the rally? Question mark. It's the big question mark. Does it ignite the rally? That's really what we're working on. W on the thumbnail. Yeah, I'm working on these. Actually, there's a little. Thumbnails are getting better. That's all I can say. This one, you guys see that little watermark? That's Gemini, banana. So started using the new tool, but I like this tool for image creation so far. Name's Milkman. Steve is the milkman. Yeah, Steve is the milkman. I don't know, dude. If you guys, I would be happy to either be on one of Steve's shows. If you guys watch Steve, you can have him ping me on Twitter or whatever. I'll go on there. But the guy, I like Steve. A lot of fundamentals. Did you guys know that if you drink too much milk, your skin complexion can turn pasty? Did you guys know that's a thing? Like, so you got to be, I just worry about Steve sometimes that if he lives in New York, it's not a lot of sunshine, drinking so much milk, you got to get your vitamin D in. I don't know. and today we will talk about this. And I've gotten so many pings about this Santa Claus rally thing, you guys. Yeah, I'm down. So many things about the Santa Claus rally that I felt the need to talk about it this week, and we should really define it. So he goes, "What? Yeah, look it up, man. It's this funny story." Who am I to speak, though? Come on, guys. Actually, Steve, I think is pretty buff. I haven't gone to the gym in like a decade. So anyways, we are at 90% probability of a 25 basis point cut for the Fed this week. What you should read from that is, yeah, the market is expecting that we get a rate cut. So it's no longer about the rate cut. This means, guys, that this is fully priced in. At 90% probability, that's your odds, it's fully priced in. So the risk becomes, is it a sell the news thing? And what do you need to focus on moving forward? Look, the dot plot and the tone, right? So the tone of what he says, is this a hawkish cut or is it a dovish cut? Have you heard those terms before? Hawkish meaning, all right, we're going to cut right now, but we don't think we're going to have any more cuts coming forward. Hawkish is like, I don't want to continue to cut rates. That's what hawkish means. It doesn't mean bullish or bearish. It just means that technically they don't want to continue to cut or lower rates more. Dovish means that, yeah, this is a start, and I think that there's more cuts to come. Powell has been very much data dependent. It may not even be about this specifically, but the market, I think it will be, though, most of the time. And the other thing is that we don't have any more rate cuts priced in until way later in the year. I don't know if you guys noticed that, but not till way, way later in the year, like April, I think it is. And then, and I don't think Powell's even going to be there. So a lot of what the market sentiment is listening for, sentiment is what moves the markets, is who the next Fed chair is going to be. So Powell, this is Powell's market. He brought us here to the dance. Now he's going to turn it over, and who becomes that next Fed chair? And based on who that is, then the market's going to start speculating on are they going to be a dovish person or a hawkish person? Do they want to raise rates or lower rates? And my gut is, I think Kalshi or Polymarket, one of the two, actually has a stat or probabilities on that. They have a event contract on the probabilities of who the next Fed chair is going to be. And you can see based on that, this is where the market thinks we're going to go. So other than that, couple key headlines. Look, Paramount launches a hostile bid for WBD. Did you catch this? This is a hostile bid this morning. It was all said and done. I think, Netflix, the argument here really, I mean, it's multifaceted, but like Netflix, is it going to get through the antitrust piece? Because that could be like a 1 year plus kind of battle in the market. So that is kind of in question. Netflix also owns, I think it's CNN, the news station. So if Trump gets involved, that might be a thing. Ellison and Trump are buddies. Is this bullish for Netflix? No. So let me be very specific here. It's not bullish for Netflix. Here's the thing with Netflix. The chart on Netflix is either way. I think that you don't have to rush into Netflix in either scenario. The chart on Netflix is not good. It's not great. Can it turn around? Sure. But in reality, when we mix, yes, technicals say, hey, pause for a second. It says very much weight on Netflix, and that it could be going down to like 85s, something like that. That's what the TA says, technicals say. But fundamentally, what the story is underneath the Netflix chart is that Netflix is going to be entering a period of uncertainty for a while. Whether or not they actually acquire Warner Brothers and get through all the antitrust stuff, there's going to be a period of uncertainty. It's not a sell everything and run kind of thing, but it's a decision that you make here and now with Netflix is, do I as an investor want to take this ride with Netflix? And we've had this situation come up in the past many times, whether it was Amazon going through an investment phase or any of the other Mag 7s going through their investment phase. It's what that is. This is an investment phase where they've kind of topped out near term with the organic content. You guys have seen what's going on in Netflix programming. They're pulling in a lot of third-party stuff, whether it's AMC, Warner Brothers, like all over the place. They're pulling a lot of even from Paramount third-party content, because it's one, it's getting really expensive. Two, they're kind of saturated. And I'm over here stuck watching K dramas. Not that I don't have a problem with K dramas, but some of them are kind of good, actually. Alchemy of Skulls, shout out. But yeah, I think it's a period of uncertainty is what it is, and it's an investing phase. And the question that you ask yourself as an investor is simply, do I take this ride with Netflix, continue on? It's probably not going to be bad. There's probably going to be some dips to buy. Or do I sit this one out and wait till the fog starts to clear a little bit and there's a clear path to the next phase of growth? Because Netflix here, what's the market cap of Netflix? Market cap's pretty big. It's like 500 billion or something last I checked. Yeah, 400 billion now. To get to that, so the next hurdle for a Netflix from 400 billion, guys, quite frankly, you have to have a path to $1 trillion here. And so what is the path to $1 trillion on Netflix? If we're going to double, because that's your choice as an investor, is it Netflix or is it something else? Who can double in the next couple of years? I think Netflix can, but I don't have clarity quite yet on what that path looks like. And so for that reason, and simply that reason alone, it's not a bad thing. It's just a period of uncertainty, and the market doesn't tend to favor uncertainty. It likes to know, factually speaking, what I have in store. Bon appetit, Your Majesty. Look at my K drama peeps in the. Yes, I've seen it. It wasn't bad, shockingly, not bad. But yeah, I think that's the question. And because that is the question for Netflix, we see that reflected in the charts. And so when we release these School of Games, when we do all this kind of stuff, you'll start to read the price up and down chart like a book. And this is what that book is saying right now. It's just opening a new chapter in Netflix's story. We've gone from one chapter, ended that chapter, we're going to the next chapter. And this current chapter is an investment chapter. And so do you, as an investor, take this journey with Netflix or not? That's the only question. Does it work out in the end? Absolutely. Probably. My gut is that, yeah, this is going to work out for sure in the end. But does that mean that it's going to go up immediately, near term, since that's what we're talking about? Probably not, even if they do get the bid. Because there's so much uncertainty around the antitrust piece after that. And now, even though they don't have a winning bid necessarily, I think they do technically, but Paramount's bid is like $30. It's like, okay, well, if that's not the trajectory, that's not the route that we're going to go for Netflix, what is the route? And that becomes the bigger question. So, dude, it was shockingly good. And I'm shocked that there are other K-drama watchers. It's funny. Trump's son-in-law is helping finance the Paramount bid. I mean, yeah, Trump probably doesn't want to see that news CNN in in Netflix's hands. That's probably a thing, also. And so we're going to move on here. But because we're pretty much fully priced in at the Fed perspective, we see this. There's a little bit of mixed signals. So dollar strengthened slightly on mixed signals. This is the one canary in the coal mine. And the question is, do we set up for a Santa Claus rally, which we'll talk about in a second. In regards to Tesla, there was a downgrade of Tesla today. by the way, the price target on that Tesla downgrade, does anybody know? Does anybody know what the Tesla downgrade price target was? I mean, it's laughable, but it aligns with what I believe is in the charts anyways. It was 425. So Tesla, I believe at 380, whatever, was at a discount, and that it will probably like float back up to 420s and probably chop around in that area. We peaked out 450. I think that's the top of the range, if you will. And I'll show you guys that in the charts later on today. But I think Tesla is primed for some kind of premium selling strategies. If you, yeah, boom, 420. I think Tesla is primed for some premium selling strategies right around this 425 area. I actually don't disagree with this move. I don't know that it was be a downgrade, but by the time it probably gets to there or close to 400s again, that means that the fair value is around 425 for this firm. Anything below that still becomes a buy. Anything above that, it becomes more like sell calls, if that makes sense, until we have the next catalyst, which would be robots, FSD, things like that. Walter sells all his Tesla stock. You'll get a chance to buy it back. You get a chance to buy it back. So if the goal is to accumulate more shares net, then I think you're good. The other one that's a little funky is this Apple exodus. So Tim Cook, we know, is leaving, which isn't for a while. And I think that's not a bad thing. But remember, as investors and traders, we invest in leadership. And so this is similar to a Netflix situation where it's probably not the greatest situation right here and now. The current regime has been, hit with all kinds of headlines of they're not growing, this, that, the other. So much criticism on Apple, like, the only thing they have good is their buybacks. Look, they've done pretty good, but this leadership team is getting a little old, and I do actually think that this transition will ultimately be good. What we're in the midst of is that we've lost the AI chief, COO, CFO out, and Tim Cook is planning to leave. What is this? This is a transition period, another chapter in the story of Apple stock, right? That's all it is. But the market does not like uncertainty. Eventually, it's going to work itself out. Quite frankly, a new change of guard is probably going to be net bullish for this stock over the long term. But in the near term, that probably means a little bit of trouble, and you're on all-time highs, right? And so again, until there's that clarity of vision moving forward, it's just an uncertain phase, and the market doesn't tend to care for uncertainty. So with these two things, there are some good points in the market. I think Microsoft catches a bit off that. Amazon eventually goes. Obviously, Google is still winning. Yeah, this is selling puts on Tesla, is selling Tesla stock. I mean, that's W for you, right? So haven't sold Tesla stock since 2013. I mean, that's a huge win. And one other thing that we've been talking about this a little bit, but December 19th, this right here. So we have a huge week of US economic data. December 19th, the Bank of Japan, that's what BOJ is, the Bank of Japan is set to raise rates again. Now, what this is doing is it's setting up for a second, this is 2.0, a second yen carry unwind. And this is because of the new prime minister, if you're not aware. It's been fairly telegraphed. So I think that I hope that any risk is mitigated for the most part. It was a 60% probability in October before the prime minister announced all the changes and stuff. Today, I think it's actually over 85%, maybe closer to 90. There's not a clean way to see the probabilities like we can over here. But the good news is that Fed QT is set to end, which will inject 300 billion of liquidity into the economy, which should in part offset any potential yen carry unwind like risk. So while yes, this is a thing because of this ending and this being the effect, which you may not know, but I'm telling you here, black and white, that's what this means. When QT ends, 300 billion plus will be reinjected back into the economy. This is good, but it doesn't offset the yen carry unwind risk, TBD. So that's where we are in the market overall. I think, you know, when we look at things like this federal piece, this is Wednesday. So right here, right, this is actually 90% probability. We are coming off the lows over here. This is 90% probability that we actually do get a rate cut in December. So mostly priced in. Where we are from a chart perspective, and this is, by the way, this is this is seasonality. This is a 4-year presidential cycle seasonality. It's not month to month. This is 4-year cycle. We are actually right here, which is not bad, right? So right here gives us a little bit of upside, but I've been saying this over and over and over. It might be dips later in September, October. Can we rally? Seasonality has been off just a bit because of a lot of policy changes and things like that. So we have to take a lot of that into account. And plus, this is only through 2012 that I had this old data. But I mean, we've been actually tracking close to this. We're closer to the highs than we are anything else. So let's say this chart's a little bit off and it goes to this here, and then we get a pullback, something like that, and that commences on. It could very easily look like that, right? In which case, that top or that bottom is essentially where we are today, and we're just off to the races. But just to note, that's where we are. I said we talk about the Santa Claus rally, and absolutely, I think this is worth talking about right now because I can't remember the last time I got so many DMs about this, and mentions on X or Twitter, whatever you want to call it. Is there such a thing as a Santa Claus rally? Yes. Period. End of story. It really does exist. For me, I start talking about the Santa Claus rally in like October. And the reason is because that's when the thought of a Santa Claus rally really enters people's minds. That's when, you know, Google search trends go up for what is the Santa Claus rally. That's before the shopping season hits. That's before a lot of stuff actually happens. And the run up into this quote unquote Santa Claus rally is significantly bigger in my mind than anything else. And what it is, just to be clear, it's the last 5 trading days of December and the first 2 of January. So the Santa Claus rally is a very specific 7-day period, which begins at Christmas. It begins after Christmas. So if you're looking for a Santa Claus rally, continue to look. We'll walk through this really quick. But what you should expect also is that it is a 1.3% rally overall. And 1.3% in a 7-day period sounds great. Guys, we just moved a lot more than that, like just this last 2-3 week period. So maybe taper the expectations of what a Santa Claus rally is, or maybe look at it, I think is my point. And if you haven't on your own, here I am kind of giving you guys exactly specifically what the technical definition. Yeah, we'll get there. What a technical definition of the Santa Claus rally is. And it is real, technically speaking. It looks a little like this, 1.6%. For the month to month, and it does exist. But it's a 7-day. Sorry, that's not bad. 7-day period. I'm doing it with a mouse, by the way. 7-day period from December 26th through like January 3rd or something like that. And it doesn't always work. So sometimes it works. This is the last 5 trading days, first 2 trading. So it's a 7-day period, 0.2%, 2013, negative 3% 2024, 2015 negative 2.3, 0.5%, 1.1% 2017. Old data, but you need to look for it, and the charts need to tell you that it's happening. Does it exist for crypto too? I don't know if it exists for crypto too. It's a seasonal thing. The winter season is bullish generally for a crypto, and it's very much like Thanksgiving, where we can get a little push. But again, this is up to the market sentiment is really what it is. It's every time I call it the eating season, but it's whenever you get around friends and family and large social gatherings, people talk, and sometimes the topic of markets come up, whether it's crypto or equities. People share stories or like wins or things like that. It's people thinking of what am I going to do, and the ideas get transferred amongst your friends and family, and it's just kind of what happens. So it's that social piece. End of Christmas, maybe you get some gifting money. If you got some money gifted, there's those retirement account deposits. If you get cash for Christmas, maybe you go buy some stock, things like that. Just read Jason. My autistic brain just read Jason in the chart. Oh, that's funny. I love it. But is that autistic or dyslexic? I don't know. Autistic. But anyways, things can go well. So it's Christmas Eve though. And by the way, that one year, I think it was 2018, which is not on here. Christmas Eve was like the very bottom, absolute bottom. And it was brutal. But after Christmas Eve, it was rally. And for me, it all begins in mid-October as we prepare for the eating season, Halloween, Thanksgiving, Christmas, and New Year's. That's a lot of eating going on. Maybe it goes on to February for what is it, Valentine's Day, and everybody gets chocolates. Who knows? But it's not about the food; it's about the social gatherings and things like that. Stock gifts to kids, super popular, insanely popular, and fund rebalancing, absolutely. So that's kind of the why bit of it, and it's very much dependent on sentiment of the market, right? So we just got past a big hurdle in terms of this last round of earnings. I think that's good. So the odds of us actually getting a Santa Claus rally, if you will, I think we could check that box off. Did we have good earnings? I think we had great earnings actually. And so that no longer becomes a hurdle that we have to pass through. We've already gotten over that. The next one is about this FOMC rate decision and the tone around that. And if these two things, we can check those boxes off and we stay at least steady in the market, that's fine. But what does that look like? I think overall, in the past, here's more updated data. It's looked really good, but this is more recent. It's been a lot more muted. The average, sure, 1.3%, 76% of the time. That means 23% of the time it doesn't work. And intra week, it looks a little bit like this coming into it. So you have a setup. So like we go down first, and then Christmas Day, we actually that's when things start turning around, right? So after Christmas, that's when it goes. So if you're looking for your Santa Claus rally, fine, look for it all you want. But what I want you guys to understand is that it doesn't start from here. The next one, when people really start talking about it, it starts on the 26th after Christmas. Oh yeah, we'll talk about this. Super Bowl is February, right? Early February. Yeah. So can it carry through? Yes. But is it a straight shot? Absolutely not. That's what absolutely not. What was this? December 24th, S&P fell. Yes. This is actually, I think this is my moment that I will never forget. Monday, December 24th, the S&P as an index fell 2.7%, the worst Christmas Eve session ever on record. I don't remember what year that was. That had to be 2018. Had to be 2018. And I remember this moment, and it's seared in my mind because it was just so epic. I mean, if you imagine the index, at the index, there was a lot of fundamental stuff going on at the time that's not happening right now. Just mind you, that's not happening. But it was it was so wild that, I mean, it was like you're all around family. I wasn't even at home. I wasn't even in the city. I think I was in a hotel. I know I was in a hotel, and I was at a beach actually. And we left, and I left, and I ran to the computer, popped everything open, and I'm like, I'm buying. First of all, I was like, oh my God, what's happening? But we were already in a downtrend at that point in time. But it was since that moment, after that moment, it was just boom, up into the right, up into the right. So if you're, the point of this is that if you're looking for the Santa Claus rally to start here now, you're either late or early. You're late because you should have been a long time ago. And for the next phase, you're kind of early. The rest of it is very much dependent on what's going on in the market today, which is what brings us to this week. And yeah, February and the Super Bowl. I like this, right? But this week it's very much about FOMC, right? So today we got consumer inflation expectations. I haven't seen that. We can take a look at it. Tomorrow we actually get some pretty big liquidity in the market. 10-year note is a big deal. The return of, weekly economic data like JOLTS and things like that. There is this PPI that's on the calendar for Thursday. I don't know if we're actually going to get PPI on Thursday. And then Friday is basically like, this is like a nothing burger. Nothing's really going to happen. But yeah, so this is very much about Wednesday. Oops. Very much about Wednesday's FOMC here. Where's the right tool? There. Very much about Wednesday FOMC. And this day, how it gets digested in the market, I think is important. And then guess what? Right behind this, we have another big, massive data point, and that's non-farm payrolls the very following week. So we can see some chop. I don't think we're going to go anywhere crazy. I'm still in the shopping mindset. There's some things that I can still look at and say, hey, do I want to go discount hunting? But it's mostly if, like, for the next 6 months, 6 to 9 months, do I think that these things are going to have a chance, right? Earnings we have on deck. So there's a handful of earnings. So we got Broadcom, Costco. I mean, do you guys still watch Lulu? I'm sure you guys still do. And RH on Thursday. Nothing really. No, nobody does this. Braze is kind of like a super small cap. The discount retailers are doing good. Ollie's Bargain Outlet is old school. Campbell's Soup. Oh my goodness. I wish I could. I don't have this clip anymore. Did you guys see the thing going around about Campbell's Soup and what their leadership said? They're like, I'm pretty sure this is new. Pretty sure Campbell's Soup exec said, like, our stuff is for poor people. I'm like, oh my God. So they might be leaving soon. If that was Walter, it was like a hidden camera. Yeah, you got to see this. It's like Campbell's exec. Yeah, CBS, November 16th, November 26th, 2025, NBC. Yeah, so okay, it's all over. I wonder if this
healthy
it is.
healthy. If you look at our pantry, we have for poor people, right? We have that's for poor people. Who buys our? I don't buy Campbell's products barely anymore. It's not healthy. Now that I know what's in it. Bioengineered meat. I don't want to eat a piece of chicken that came from a 3D printer. Do you?
I don't know, man. So this, I don't think it's really affected the stock price that much. But yeah, that's the thing. I couldn't believe it when I heard about it. My wife told me about it. I was like, is that real life? Like, did that legit happen? That's wild. Okay. I mean, the stock's not, look, I mean, the stock is not doing good. Jeez. I'm like, does it even matter at this point? Probably not. You guys didn't know? Okay, cool. I'm glad the audio worked. I never share audio like that, but yeah. So there's that. um, you know, it happens. But yeah, so this is where we are. Moving forward. Sienna, Chewy, yeah, there's not a Nordstrom. No, that's Nordstrom. JW Nordstrom already reported. Oh, we have Oracle, Adobe, and Synopsys. Is this right? Synopsys on Wednesday? Synopsys could be really interesting. I think this is a pretty solid turnaround. Yeah, right off the 200 week down here, a decent little base over here. I was looking at this. This is going to try to reclaim. So Synopsys could get actually pretty interesting if it gets any higher, or at least holds. I don't know the valuation here, but this is a Jensen darling. If you didn't know, 86 billion is not bad. 86 billion is totally manageable. Trying to come out of the muck here, that's for sure. And then Adobe, you guys didn't know about that. Yeah, Adobe is just hitting this oversold kind of bounce, and that's just completely in anticipation of maybe speculation that it's not as bad as feared. But today, you're essentially right at the top of that trend line where it should stop. And so now you have earnings, which is going to be a TBD kind of moment, very much like CRM, where CRM had amazing earnings. Well, not, I mean, CRM had an amazing price reaction, two-day push right into the 200-day. That 250 area was key. So this was, to me, CRM post earnings was either going to go to 200 or 250. And at which case, as long as CRM can hold this general 250 to 240 area, this really ugly kind of, well, it might be over here, pattern could be gone or be going away, but it's got a shot into those 300s if it can hold this general area. So 300s being here, and even though, like, even at that point though, then you really want to be cautious of something like that. But from here to there, like, that's a lot of room. So if you can get a 250, it's 27% over an extended period of time. I think this one you need to be patient with. On CRM, you got to be super patient. Costco, Broadcom getting in the news today. Broadcom, massive. I mean, anytime there's this new, it's like Broadcom's the new one. $2 trillion market cap coming in on today, 1.9 trillion. That's pretty good. This is from our charts. This is kind of like target acquired here. But yeah, this is, again, kind of channel up. If it holds this is still up and to the right. Extended targets are way over here for much later, but you can expect a little bit of chop and like, I guess, digestion as it tries to traverse these areas. I think sideways around like that 400, 410 being kind of like the max level on Broadcom for the near term is probably on deck. And then Costco, Lulu. I mean, Costco, dude, Walmart. So Costco coming down. This is actually not a good setup, but it's also right in that area. Costco doesn't tend to move a lot on earnings because they do these kind of monthly updates on where their business is. Costco looks a little Netflixy like, where like the chart had turned quite a bit a while ago. So the chart turning here, losing the general trend line on Netflix and all significant SMAs. So that's what I'm saying. You know, I think Netflix can come in somewhere around this area and like a basic retracement even from these lows to these highs should take it right around 75 ish. But it's going to be a slow grind. I don't think it's a straight down kind of thing. Costco versus Walmart though, that's wild. Like look at this Walmart chart. And then I think of that Costco chart. I'm like, well, I don't know. Costco's looking more Netflix-esque to me than anything. But it's not. It's actually no. Costco's fine. It's slow. Look at this chart. How do you not like this chart? It's just a little extended. So this looks more like 700s to me. But net, that's probably going to be solid. We'll have to see. Earnings can change the story pretty quickly. If it can reclaim nines, then you're back to the 1200s and probably stock split later on. But yeah, I think we're good for the most part. I have one last thing I want to do before we actually go into the charts. And since we, you know, it's going to be a little, you know, it's going to be a little rough this week. We could see, you know, it's going to be hard to tell. So what we usually like to do is check in with my friend, our good friend, Miss Cleo, and she gives us a little weekly reading. So let's go ahead and check in with her really quick, see what she had to say. All right. So, so here's we are. So what we get from our friend Miss Cleo is we get a weekly tarot reading. So the T and TA, her TA, T and TA stands for tarot. And the way this works is we get a theme card for the week. That's up on the top right here. And then for every day of the week, we have individual individual cards as the reading. So this is the theme card. It's not bad. This looks like a lot of cups. That's good. I mean, I don't know how to read these things. I have no idea how to read these things. Mostly comedic relief. Oh, I do remember. I remember this guy reminds me of what's the big red dog? I don't remember the name of the big red dog. Clifford, the big red dog. But 9 of cups, 9 of pentacle coins. Then we have a queen, strength with Clifford. There's not a lot of numbers. 9, royal, strength, royal. That's a hard one. I have no idea what she's gonna say. So let me just stop. Let me just stop guessing here and see what she wrote. So we get a reading. We get a reading. So the theme card is the 9 of cups. The picture shows a wealthy man, bragging about his vast collection of earthly treasures. And I like to, bragging. That's not good. This can invoke, it's just my first gut feeling. This can invoke a period of greed and ego, which can lead traders to be reckless. All right. I don't want to be reckless because we have a big week ahead of us. It's definitely not a week to be reckless. The market rarely sees positive or negative trend days under his watch. Oh, so what does that mean? Chop? But there's a slight preference for negative chop. This can mirror crypto's week in terms of chop and the killing of option premium. Okay. So Ms. Cleo says sell premium. Possible. 9 until Wednesday. 9 of Pentacles. That's today. This card symbolizes luxury and wealth, which imbues it with a slight bullish bias. However, it rarely trends in either direction and usually closes within 0.5% of the open. All right. I see some weakness. I see some strength. Hoodie strong. Amazon, Apple, weak. Netflix, weak. It's all right. The best chance of a big move is when following a trend day. Friday was not one. Was Friday a trend day? It was for some, Miss Cleo. What are you talking about? But it wasn't a big day. So I don't expect much here. We can probably buy dips and sell rips. All right. I mean, slow chop to the right. I think we're fine. Tuesday, it's tomorrow. Queen of Wands. The King and Queen of Wands are quite energetic, which can magnify the usual impulsivity that this suit brings. So Wands are impulsive. Okay. Wands are impulsive. Oddly enough, she has a slight bullish bias, and like Monday's card, has a high chance of trending in the if the prior day was trendy. Well, today, is she calling? Dude, this is how this stuff goes. Okay. High chance of trending if the prior day was trendy. Today looks trendy to the downside. So maybe it's a retracement of today. So turnaround Tuesday, I don't know. Mean reversion has a higher, so turnaround Tuesday. All right. Mean reversion has a higher probability than continuation, but I play this like a day trader instead of a swing trader. Agreed. Long term, it's not bearish enough to suggest you shouldn't be adding to positions. It's a weird way to phrase something. Wednesday, strength, Clifford. This card usually appears when we are in a bit of trouble and need some help to stay strong and maintain our footing. This can apply to either bull. See how she does that? When she does stuff like this, dude, oh my God. She's like, it can go one way, but I don't know which way. Okay. Look for mean reversion with energy similar to that of Tuesday's price action. Oh, that's just the energy. Energy similar to that of Tuesday's price action. Trend follows trend. Chop follows chop. You get the idea. Okay, I got that. Thursday, King of Wands. The king is following the queen. Yes. Okay. But just a day late. Oh, because Clifford was in between. Well, they have the dog. He also brings impulsivity. So this is after FOMC and a slight positive bias. Okay. So green is positive. Continuation is more probable with strength greater than the day that brought us here. Stronger than Wednesday. That's hard to believe. Okay. I mean, we've had some really lame FOMC days too. I will say that. So look for a bigger move in the same direction of Wednesday, but again, be careful of daytime traps. Oh, so overnight. So daytime traps would be intraday opposing direction trade, that gap overnight. All right. Friday, Queen of Pentacles, King, Queen. We're showing lots of royalty this week, which signals both energy and protection. I didn't know. So royals are protection. All right. If this one trends, it will be to the negative direction. Who's protecting who here? That's so frustrating, Miss Cleo. As such, the best case for bulls is a flat close. So I expect a day of selling rallies and chasing dips. whatever. There's a decent amount of day trading energy, but not enough trend energy to suggest this week is a must trade. We do have a few days of continuation, which might pay directional traders something. I also think that it's going to be, I mean, individual equity based. So, King of Wands, H200 chips are a go. Is this live? And W Clifford, the big red dog, for sure. H200. So I actually like Nvidia. We'll take a look at Nvidia for the H200 chips being a go. I think this one, if the market is going to be neutral, first of all, I'm not actually reading Miss Cleo's thing as like what's going to happen, but I can say I can see some neutral chop, and usually kind of sets up like a zero sum game, if you will. If the market is going to be neutral, what we can say is that there's just going to be rotation amongst either the mag sevens and or sectors, and that makes a lot of sense. Here we are at the index level. This is our daily count, so no continuation today. That's what we have for sure. This Friday daily candle count here, daily candle for Friday, it's kind of a reverse. It's a neutral candle. If we stay below 684 for the week, though, yeah, we can see a little pullback and probably likely into that prior box. So here's what that looks like with some drawings. Let me see if I can turn off. Nah, I can't turn them all off at once. I should have been able to. Anyways, here's what this looks like, generally speaking. So from our NFP range here, 675 was the high. This was that big red bloody day, single day price action here. We're actually doing okay. We're significantly farther above 675. I would say at worst case, if we do get a pullback, it's into this 675, which is not that big of a deal in and of itself. What we definitely want to see here is a break over or hold over 684. Net though, the trend count is what's interesting. So we were higher high here. Some of these disappeared, huh? We did have a lower high, and we did have over here a lower low. But what's super interesting is that what just happened here, we breached that. So to me, what this really means is that, well, yes, we might get a pullback, but these pullbacks should be buyable. And so it becomes kind of a setup week where if this pullback comes in, and really this is going to be that big, what this was that this was a downtrend line. That's what that was. It was a big downtrend line, and clearly we've broken past it. Typically, we don't teach to chase this first one. That first break of a downtrend, if you get real continuation, which would have been over 685, then cool, right? Like if it looks like holding over 685, it can look like this, and that's fine. So 685 still remains where I think we should actually end up going. I must have deleted some things here. But a pullback, because the trend count has been broken, meaning that this downtrend is broken, like this is no longer a lower high. At best case, this has to be a lower high over here. But all of this becomes consolidation, and this is the bet. This is at most what the bears are looking at. But I mean, they're what's they're called? Their flagpole keeps moving because it was over here, and then it's like, well, now it's over here. Well, maybe it's over here. But their target, if you will, it keeps moving on them. And I think what this is doing is it's actually giving them time to reset and cover their shorts. And that's actually really healthy. And if this does go on, then I do see 700s in store by the end of the year, or before that, like 7 plus. Actually, we'll just do that here. So from here to here, we can see a pullback into 675 and this still be bullish. 710s here becomes more or less the Santa Claus rally target right in here. 710s, not 700 exactly. How many percent is that? So percentage, it's 4%. So I'd want to see us over 690 by Christmas, and then a pullback into there is going to be perfectly acceptable. For now, though, we've just come off a pretty solid extension or continuation from that breakout. Remember this doomsday? Everybody was all up in arms. Oh my God, the sky is falling. Like we're just going to the gulag. I mean, this by itself, I mean, that day was like, holy shamoly. Luckily, we didn't fall for this trap. Hopefully you guys didn't either. But that didn't look fun. It didn't look fun. No continuation on day one usually means we're going to continue to retrace. And because that was a fundamental period of time, boom, market hits the Uno reverse card, and here we are, right? And so we're just on this merry continuation, on our merry way of the continuation. So sideways chop, a little bit of congestion, and tying this to a possible 675 or a couple point pullback, less than 1%, perfectly fine, which sets up for a zero-sum gain at the Mag 7 level, maybe a little rotation, good for, I think, Nvidia. And and broader rotation across the board. So the market underneath it all throughout this entire thing has actually been pretty good. Breadth has been widening. We have been seeing a lot of that diversification, money moving around, not seeing a lot of money go to the dollar. We do, like, in the midst of all of this shenanigans that we've been talking about, in the midst of everything, yen carry trade 2.0 coming across. Even with all that, we're still seeing healthy rotation. And again, with QT ending, that could offset a lot of those yen carry trade woes, if you will. But here's where we are on the Qs. So clearly a lower high here, but also very true is that a similar downtrend on QQQ has been broken. We have completely come back up. 614 remains to be that kind of like 20 and 50-day simple moving average right in here. But for me, is that ADP / NFP low right around 614. So definitively on the Qs, this one is a clean read. Unlike SPY, it's not as clean. This is a clean read, is that if we can't get a couple days like closing over 626, we're just not going higher. And so what I mean by that, because these are fundamental levels, this 626.57 here, that is from this ADP print. And when the government was shut down, the market was using ADP in the absence of NFP. Now, from now until next week, we have two things. We have FOMC and we have NFP the very following week. So chop is typical here, and chop in this box from 625 to 615, usually what we see. And unless we have like multiple days opening and closing above this kind of like red box or in this red box, we're not going to see it. So I'll just tell you what that means. So here's a 30-minute chart just to bring this down. What I'm wanting to see is I'm wanting to see a full open and close. So like this day, we open above today, but if we close below, it's not going to count. Over here this day, this is open below. It doesn't count. Yeah, we trade inside, but it's also a close below. This doesn't count, right? We don't count this as like a trend day. This, if it closes below 626, it's not going to count, right? And then tomorrow, also, if we open below and close above, that whole day is not going to count, right? What I need to see is I need to see open and close. above like that entire level. And when I get 2 of those, maybe 3, something like that, 1, 2, something like this, 3, then boom, then we're up and to the right. And so this looks like that. And this setup is kind of what Miss Cleo was talking about, which is why I don't necessarily disagree with her. That said, FOMC Wednesday, big turning point in the market. No big earnings are going to be in our way, but again, it's going to come down to that commentary and the dot plots. Really, dot plot FOMCs do make a big ripple in the market, and until then, I think that we can continue to hit our heads on this. A big pullback is down to here. And so here, 615 becomes value buy. And I don't think that we get below that. I think that we can traverse like that. But I don't think that this, I'm a buyer. I'm a buyer. I'm a buyer. I don't think that we get below this. Up here, I'll let this play its course out. And I'll see, hey, I don't need to step in front of this. I don't like to buy at resistance. I'd much rather buy at support. Your support 615 on QQQ. So hopefully that's clear. iDubbbz has been good. There's a lot of good things out there. The dollar bounced this morning, quick pullback. This downtrend. I mean, we're not over hundreds. This is not bad. This is not bad. This is actually somewhat bullish for gold. Again, gold remains that geopolitical hedge. With the dollar, small bounce. I'm not seeing the equivalent continuation on gold right now. This is clearly in consolidation at the moment, but I think that this has also, it's very similar to the indices. If we get this pullback into 375s on GLD, I think this is a rip roar into the end of the year also. And again, even though gold's come all this way, I don't think this bad boy is done. I think your next stop is like 450s plus into next year. You decide whether or not that's a thing for you. But this mega chart, which make no mistake, that's exactly what this is. This mega chart, it's a monthly candlestick, is just something else, right? So can it go sideways? For sure. Is this steep and uncorrected? Yeah, but does it need? There's no reason. I don't see any unless there's a fundamental reason for this to be corrected. I don't think it's going to. There's no reason for this to come back fundamentally or sentiment wise in this market environment. So I don't think you guys remember, like, if this looked like it almost looks like a GME chart. Someone mentioned GME, but when GME was going like just parabolic, it kept going parabolic until there was a reason for it to stop going parabolic. And that reason, being you couldn't buy it anymore. But until we have some kind of reason like that, I just don't see this one stopping anytime soon. But can it go sideways for extended periods of time? Yeah. And right now it's more or less been sideways for 2 months. So we'll see. So let me go ahead. I'm going to jump into some of your requests here. It's about 10:20 my time. We'll do like a 20 minutes maybe of these tickers. I think a couple things I'm going to hit really quick. So we talked about Tesla. So Tesla, from a daily chart perspective, there's no lines, no nothing here yet. This one actually pretty basic to me. So force 15 has been, remains the big pivot on Tesla. That's 415 here. This comes from 2021 all-time high, the pivot here, 2025, and where we're just coming off of. The prevailing uptrend, if you will, on Tessie is here, prevailing, meaning like the current uptrend is fully intact. If I turn on my SMAs and things like that, today we're retesting the 50. I wouldn't concern myself too much with that. What I think that you're going to hear potentially is maybe some people start yapping about this kind of thing. But net, I think that this becomes kind of like your, right in here, congestion zone, if you will. And this is where I've been on Tesla for a while, is that this becomes a congestion area. You can see this chop for a while until it ultimately resolves itself, my guess, this way to the 600 pluses. But that means like the next 6 months could be choppy. Hence, and how the charts align with the downgrade on Tesla today. This is not bearish. This is completely neutral. And it's setting up for the next chapter in Tesla's saga. But sometimes stocks go sideways. Actually, most of the time, stocks go sideways. They make big moves, right? And, that's what that looks like. And then, then they kind of like make these neutral sideways moves. And sometimes those sideways moves are more extended than you think. It's not that this can't happen. This can happen. That becomes that 370, 390 area still. So any kind of buys around this general uptrend, because that is what this is, remain like ideal. And this is just kind of topping up for right now. So even if this is a pattern trader's favorite pattern, quite frankly, that takes it down to 388, something like that, maybe a little bit lower, 370 at worst, at which case I would very much expect it to go whoop, straight back to where it came, 460s. I mean, so this is premium sellers paradise, not yield max necessarily, unless you're doing jumping around, but all good. I think I do want to check in on Nvidia. Oh yeah, so Nvidia, if it's a zero-sum game, this guy's looks solid. I think this has a date with the 190s. Look at this. Oh, I'm there right now. What am I talking about? 190s. What an idiot. I have a trade that's targeting this 195. So I think this happens. This is H200s live. So figured there'd be some kind of headlines that's going to hit this. I didn't know what it was going to be. But the market has this, we call inefficiency. This is very weird how this works out sometimes. People are like, is this the male astrology? Yeah, probably. Because there's no charting system that was going to tell you, other than mine, that this was a decent probability of getting to that 195 area. And then I want to see what happens. So I think that this gets to 195 from earnings. You guys remember the big gut-wrenching despair is what we called it. Gut-wrenching despair. Nvidia hits this massive earnings. I look at it one glance in our crew, which they know, and it was like, let everybody celebrate. But this is not going to be good enough yet. It's right into the bear zone. It was right into the bear zone, meaning from here to wherever it was here at the time. That is the bear zone right here. So this remains, by the way, the bear zone. Actually, I think this gets a little bit deeper because of where we are. So I can take this down to here. And so 195, so from this high to this now recent low. Also, by the way, this recent low was marked previously as where I think we could go downside. I think that we can make another attempt into that bear zone right over here. And that sets up for a trade in the near term into that 195s. Now, if it's a big if Nvidia can get over like the whole general area, like this entire general area from 200 to 195, let's say Nvidia gets, I don't know, stuck and trades in this area. If you get this kind of thing, even a pullback, that's going to be super bullish. I mean, super bullish. We're talking about Nvidia down here right now, and 177s or below have always been the accumulation range for Nvidia. But where we are, I think that we have a pretty clear trajectory into 195s. From a trading perspective, that's where we stop. And then we have to see, can this actually continue on? And if it can, that's going to be super bullish. And all of a sudden, all of this becomes what? It becomes a big consolidation. And we have a couple more things to look for. We have the session gap to fill over here, 206s. And then this entire shenanigans is like a whoop, whoop, like that. Come here for the sound effects, okay? Into the 230s, 235s for mid next year. But I think that's where we stand. How does actually play out in real life? We'll have to see. One foot in front of the other. We're on this green bar right here first, and then we respond based on price action and news as we move forward. But this is what I mean by near term, 1 foot in front of the other, 195s, lock it in. And thank you, headlines, which typically tend to line up. And if you didn't like that, now you can hit the like button. But anyways, let's go ahead and check the rest here. So I think I already had this trade on. We already have this on deck. So that's awesome. That's where I think we go. 195 Nvidia locked in. Amazon though, another one, 0-sum game potentially. If we rotate, we have two options, Microsoft, which we haven't talked about, and Amazon. I think Amazon has made a lot of the move. We hit this 236 area. I'm long Amazon. What I want to do here now is I think just in this general area, this is 227 where we are today and where I last added to it, literally right here, right now. I'm just going to say this right now. It can easily pull back to sub 225 and still be completely valid. And I think that's possible. So if we get a little something like that, 225s, just under 225 becomes a better buy zone. And I like that for a better add. I think this is still stuck a bit in the chop zone into 237. It's not going to be until this gets over 237 that this can make a big $7 press. And again, similar thing to Nvidia. It's going to have to be on a headline, maybe not. I think it'll be on a headline. But Amazon as a longer term chart is actually super healthy. I'm very happy with it. Everything's looking good. I think as long as we're holding these levels, this is acting right, and this whole thing becomes a consolidation, which at that point can actually bring us into the 300s for next year, assuming Bezos doesn't step in and pull a 2025 on us and start selling left and right. But if he does, there's always the Microsoft one, which, if you don't know, I posted this a while ago. It's a bit of a double top-esque. But what's interesting about this is that this double top here had actually completed, this pattern completed. If you double it here, completed right at the 200-day. So that's all I did is I just took this, doubled it. That pattern completed at the 200-day simple moving average. Watch this. And then I'll take this 465, pull it back. What is that? That also aligns, really precisely, right there with 2024 all-time high. And so I got one confluence, two confluence. The only thing I'm missing was this third piece. So from a trading perspective, I have two pieces here of data, probability data, technical probabilities that that keep this bullish right here. So these two things actually look pretty good. Can it pull back? Yes, but we have more bounce to come first. I think that this, I don't know that I should even count that. Yeah, I think we're good for a press. I think we're good for a press back in that 500 area sooner than later. Definitely if we can get over the 20-day SMA today. And I think some of this money probably comes out of Apple. With everything that we're looking at right now, this is what we would consider a textbook look above and fail. So if you get this, there's that one option. there's another, could look like that later on, but the box here is right here. So I think 265 is in order now. You're probably going to lose the 20-day SMA soon, which is 275. And then when you lose that, it goes to 265. If we don't get any sentiment revisions on Apple. But that is going back into consolidation. That's what consolidation looks like. These SMAs are contracting a little bit uncorrected, but with the uncertainty ahead in Apple's like immediate future, I think you can kind of just expect that basic pullback to around the 265s, high 260s, and then see where this goes from here. Hopefully it goes sideways, but some of that money coming out, going to other places. Google, similar in terms of this is didn't even realize. All right, so zero sum game. These guys are not on discount right now. I think Google I had to 300s as a basic pullback. Here we are. I don't think this is bearish at all. I think this is, both of these on Apple and Google are probably going to be a buyable pullback. This thing has been fighting so resilient for so long. I got to give it up to Google. Nobody's going to care about a $10 drop on the Googs. I don't think, I just don't think they are. But a retest into that prior break over here is perfectly acceptable. We would call this a break here. We call this a break and a retest. And then you'd want to see something like that. That would be ideal. We'll have to see how this goes when we get there. But for right now, I think that you kind of slowly, and I mean slowly, this thing is just so strong, slowly like migrate to this 300 level. I mean, like pennies a day, because yeah, it's just been wild. Unless some headline comes out again, and Google has got another iteration of something that breaks the charts, which could easily happen. But Google has been looking good, and yeah, bye bye Nvidia, because zero sum game. Share the story, and at the index level, that's pretty choppy, right? And we have FOMC coming Wednesday. So I don't trust Miss Cleo, more or less. I pulled a Miss Cleo right there. And yeah, I think this sets up potentially to watch Google around that $300 level for a long. I think you could watch it when it gets there. So let's look at some of your requests. Some of your other requests. I see Reddit, rddt. Reddit did not get in the S&P 500. It's possibly there. You got big consolidation. Reddit is so squeezy. It's a hard one to trade because it's squeezy. It likes to do that. Yeah, I mean, it's riding this right now. I think you're continuing up. All I just did was add some volatility bands on there. I didn't do anything crazy. But yeah, this gets up into, they're tight 240s, and if it can extend, it's got a couple inefficiencies here. So what I would say on this is that this to me looks like it's going to hit its head and contract from a vol perspective. You might get a single press, because that's how Reddit does it. They do it like a one go, kaboom. As these SMAs start to catch up, you're going to have some expansion, which is obvious on the charts. As those SMS expansion is going to be lagging, but we know that it's happening. And so that does set you up for 250s in like however long. Maybe not this week. This looks like it's got to take a breath before it can go and let it. But you don't know with Reddit. It's just going to happen. It usually curls up like this, prepares, and then launch, right? So it's just a question if you're still in this launch from a 1, 2, 3, 4, 4-day consolidation. And this is dip. Let me just tag this here. As long as it's over 231, it should migrate to 240. And then if it can really get through 240, then a big near $20 press to almost 260, just under 260 is in line. I saw someone mention DraftKings earlier, DKNG. DKNG is similar. So 20 something dip buy, solid. I think this makes a steady move into February 8th Super Bowl across the board. Event contracts bullish for everybody, but 37s is your next stop. This one can pull back and it still be fine. This is a slow grinder. Not the stock, but it's a slow grind. I think this goes sideways and starts to hit its head up against 37 right over here. And if it can get through 37, then you have another quick press, which is going to be through the 200-day simple moving average. So this one honestly looks like chop, hit, right, pull back like that, and then get through, which that push through could be here, but then you're right back. This is how charts actually work, because they're not just straight lines. But in reality, they legitimately work like this, which is all to say, hey, you can have some pullbacks, but as long as this is holding like 33, 34, this is very constructive. And that's where your pullbacks tend to be. And I think this moseys on to the 42 plus level over time. And this looks very good. But that's your targets on DraftKings. You think volumes are so low or weak? I don't care about that. That only matters. Look, low volumes in general can set up for, there's a very, what's the word I'm looking for? I'm at a loss for the word. The volume thing is misunderstood concept. Low volume rallies are very real. So volume does not matter as much as people like to think that it matters. And even if volumes are really good, it's about trending volume. It's not about 1-day volume. It's about net trending volume overall. And so like if I took, let's just take that. This trending volume is actually not looking, let me just go this. Trending volume is actually fine. So like this volume is trending slightly high. I don't have massive volume. This is not a training thing, but volumes here are looking better. I don't have a problem with this volume at all here. So trending volume actually building on DraftKings. Did we get a headline or something? This looks good. Volume trending to the upside. I'm happy with this. As long as these are getting higher, we are good. Iren and Nebius on Nvidia news. Oh, you guys kill me. Where is it? Dude, I don't. So Iren doesn't look like it's moving on a headline, but Iren is also sideways for a bit, which is constructive. So I think you let this go. This is probably good. Finally, volatility is coming in. This is consolidating here. This is getting tighter and tighter and tighter. There's this old term called NR7. This is like narrow range. The range is getting narrower and narrower and narrower. I was used to having this thing have like a 10, 15% average true range day. this brings a little maturity to the stock. It looks like it's going to squeeze soon, extremely soon. I don't need an indicator to tell me that, but a squeeze is about to fire on this bad boy soon, because you can't get this type of congestion for that long after this type of expansion without blowing at the seams sooner than later. My gut is that this is going to go upside, and that's at, it's going to trigger at 46 here. I'm just going to add alert. 46 and change. It's going to try. See this whole thing, all of this. Damn it. Shoot. And you should get to the 20 and likely the 50, which fills a lot of low volume liquidity. And I think this general on the right side of my screen, you get through this mountain range, it's really off into the races over 48. So 46 takes you to 48 is how this is going to work here. It's not over. That's not actually what you're looking for. So this happens here. You don't want to see that. That's not going to be good. What you do want to see is you want to see something like this built. As this gets over this section, then that range, come on, adjust there, should close sooner than later into that 58, which retests that prior broken support area right over here. So this green becomes your trading range. We use that volume profile, visible range volume profile is what that is, to map out that trade. Otherwise, this can get kind of ugly. So you don't want to see the break and fail here. You want to see that continuation through and get back into that just under 50. DraftKings with the recovery. Nebius, same thing. It's holding its own. This one looks good. Happy here. Hold, hodl. Here's your prior top, prior trap area right here, session gap, 79. And then this holding structure, slowly over the 20-day SMA here now. Oh, this is easy. So you're on 113. This is easy. You're going on 113. Sorry, don't mean to make it like that. You can go higher. Oh, do I have enough of this? I like this Nebius chart. I like this Nebius chart for a big move. 130s. That's like 30% move. Yeah. This can hold. It's not there. It's trying. It's $100 level. So I think this just makes the general trajectory. If this can pull back, pullback's holding. Let's get it specific. Boom. 94.88. 94.88 price of interest, we'll call it. I'm basically just grabbing this little blip right here on the radar, which is a retest of this prior resistance holding as support. One here. Oh, dude, it already happened right now. This is a very good technical setup. The bears are going to come out and play around 102. That's for their little potential heady shoulder, whatever. Let them do their thing. But this is also why this setup for the week is like, dude, it's choppy. But we have to play it by ear. So this gets to 103, but it's not out of the weeds yet. I want to see that failed head and shoulders pattern. The most bullish setups are broken bearish patterns. So when it gets here, don't press this yet. Let them all yell, head and shoulders, whatever. Worst case scenario, this kind of gets back to, not worst case. If that starts to play out, you get back to that 94 again, which is where it was this morning anyways. not a big deal. Worst case scenario is you're back to 87s, at which point this right here will have played out, and I'm a buyer again. But I don't think that actually happens. I think that, just my gut, this is more likely to happen, and that failed bearish pattern plays out like really bullishly. So stay long, be long, add on dips. I like this. Nebius. We did Amazon. We were going higher. Oh my God. Are we going higher on Lyft? No, no, we're not. Not yet. So here you got to 22. That was the target. I think you're in that. This is that same moment. Like you don't want to, you let the bears do the thing, right? Let the bears do the thing. First of all, Lyft is not a short-term setup. This is super long-term. Worst case pullback is back into the 18s where we came. But again, I think you continue to let this do its thing and let this play out. No trade here. This is pretty neutral. Pretty neutral. Grab being affected by yen. I don't know. Let me see. No, I think grab is fine too. Grab's just doing what it does, which is consolidating. Like the entire chart of grab is like in this massive multi-month consolidation. But generally speaking, your trajectory is good. That's just like a retest. I think we got Amazon a handful of times. So Amazon, I think that was one of the first ones right here, 227. That's where I bought it last, right here. If we lose that, I think you can get a dip into these 224s plus, but for all intents and purposes, this should hold for now. Reason hoodie. Okay. It was looking really, oh my God, this thing hit like, you see, I grimaced like right as I pull up the chart. Dude, best stock in the market. Just gonna, I don't know what to say, guys. I don't know what to say. Other than, let's see how this plays out. The bears will continue to play. Here's where we are. So our broad trajectory was here. I wanted to see this hold. It broke down a little bit. We're still retesting the bottom of that trend line from having this big breakdown moment. So breakdown here, big bounce. We're not out of the weeds yet. We're just not. As much as I would like to say that we are, like one day, I think we're going to be, but I just need to be, I want to be a little bit more cautious. Weekly squeezes. Guys, I love the stock. Imminent. It's going to squeeze on a like high time frame. Let it be. I don't need to press this bet. I think it was like 180s or something like that. Here's the consolidation. So if this pulls back, fine, to 128s or so and holds 128 from here on out, this is very good. This can pull back. If it holds that 128, which is essentially going to be the 20-day SMA, is very good. Let it continue to try. That means our next press is in a 142s. This little head and shoulders pattern is complete, by the way, right? So if you didn't know, here is the head and shoulders right here. Like 1, 2, 3, whatever. And this little pattern, I believe it had more than doubled. Yep. More than doubled. And the breakdown, though, wasn't until over here. 100s, solid dip buy. I want to see that 120, mid 120s hold as support. So I'm not going to press this. Let this go. If this continues, we're in the 180s. We're in the 180s and we're back on track. So It's a lot of stuff that can happen in between now and then, but check this out for just a second. Let's say that this does pull back, right? Let's give it to a bears. Let's say it pulls back to like a deep pullback. Let's give them 120. Let's give them 120. And then you have this kind of base right here with this big liquidity grab. And let's say this pulls back to 120. What are you guys looking at? You see it? I mean, I'm just going to get more bullish. I don't know what to say, but that's a bullish pattern. Not that I'm a pattern trader, but I'm just going to, there's no reason for me to press this, but I like this chart. I like this chart a lot. Oh, hopefully I got you guys set on Amazon. A couple JD. So China, and so request was JD, but we're going to look at general China. So China broken out. This is BABA. 165 is like the deepest that I would have wanted to see this go. But again, if we're going to spread out a little bit, things get better in the China verse. I don't even know what you call it. Trade wars, whatever. I think you can start to look at this again. This doesn't really get good until it's back over 188. Yeah, I don't know. I don't have a big reason to go long here, but I want to watch the 20-day SMAs. So it's the first pullback. If these guys, these BABA, JD, this is BABA, if it could get back over, let's say 160, we have some pretty quick trades to the upside to take in very near term. Here's that 20-day on JD. Here, 29. I think that you could essentially start to make that trek back in, right? Pull back in to the 35s, 40s, and then ultimately over 40 throughout next year. But you have to look, this played out fine. You be patient. Like this is big consolidation here, but I don't see a reason for that to go any lower. Mostly de-risked to me on JD, but it's sentiment. These stocks do not trade on Western fundamentals. You try and put valuation metrics like PEs, PEG ratios, you're wasting your time. That's not how they work. So forget about that nonsense Western fundamental stuff on Eastern stocks. But they look decent otherwise. They look like they're going to trade or try. Here goes some bony frill. I mean, a lot of bony frills. AMD. AMD is getting really tense. It's a very tense moment for AMD. Very tense moment. Man. So she held the 195. I was thinking 185s. Didn't get there. Extremely tense standoff. Wow. I think that it's not now, but my sentiment on AMD has been rising wedge, which is a pattern. It looks like this kind of consolidation wedge is up here. And then explode. But the explosion is TBD. I'd rather see this explosion over 233. But the power shift, if you will, like quote unquote power shift line, is 227. It's that red line. That's 2027, or that's a prior all-time high from 2024. So as long as if it gets back over 227, which is 2024 all-time high, that's going to look really good. Give it a couple days to pull back, retest, and continue on, and then you get an explosion for sure. But if that doesn't happen, I still think it's winding up, because you could still get 185. And I just don't want to, you don't want to front run this kind of situation. You want to respond to the reaction in real time. I don't think it's going anywhere yet. Keep your cool on this, but yeah, this is getting very tense. Price action here, and this range is getting narrower and narrower and narrower. This is a squeeze is coming. In what direction, you don't know until price tells you. Rocket Lab. The lab of rockets. All right. Wow, guys, 38 is $50 now. What a buy! What a snipe! I'm just so proud about that one. I got that after hours too. Anyways, here we are. No, target acquired. So let the jets cool off for a little bit before you go for another takeoff. That's the moral of that story. Let the jets cool off, because in reality, top of the box. So you need to refuel. We need to stop for some fuel here. So the question becomes, where do you refuel then? So it's usually around the 20-day, something like that. So I have about 45s, pullback, retest. A really bullish pullback would be 48s, but I think it's going to spend most of its time around the 48, and then essentially do almost exactly this one more time over here as the jets cool off and prepare for the next takeoff. So again, patience, amazing liquidity grab down there. I think if you get another one during that time of consolidation, as it's like this, what happens is that inside this 45, sub 45 becomes your dip buys. Yeah, Amazon pulling back to the sub 225. Here we go. Would you mind looking at Datadog? Is it ready for short dated long? Unlikely. It's in the IGV specifically. No, it's not. It's no touch. So downside target acquired. Again, stocks go three directions. They go up, then they go down, and most of the time though, they go sideways. So you got to let this digest. Sideways is this, right? So that's a big sideways move. So I think that you're going to be in for a world of hurt on Datadog if you try to take any direction on Datadog. Quite frankly, this says 135 to me as it continues to digest, but that's not ready for it either. You got to let this, it could be like, it could hold for a long time, do something like this, right? So I'm not touching this with a 10-foot pole anytime soon. Two big moves in both directions, gave it all back and then some. I think it comes down to 135, at which point I'll look for something better. But this slow type of thing is what I'd be kind of looking for personally. But we'll see on Datadog. And we're going to close it here, ETH and BMNR. So before I get to ETH, but we'll just take a look at Biddy. So the Biddy coin, I think you're going to be okay. Net. I do prefer dip buys deeper. But in both of these scenarios, where you're at on the Biddy, I call it Bitcoin, Biddy, is coming off of your tops. You're at a 50 and that's from August lows, not like inception lows. That's just from this most recent pivot. Pivot here. So here, 48, here, ping. I don't think, and that's a big pivot from all of this. So just so you know where we are, where we're coming from, where I'm measuring from here to there. That sets up as 87 near term. As long as you can hold 87 and a half, I think you're like trend around that area. I think you're fine. I do think that you're at risk for a deeper pullback on Bitcoin, but I don't have a reason to trade for that right now. This one is going to be, I think crypto is going to be very much yen carry trade dependent, quite frankly, more so than the equity market. There's no QT ending to save the cryptoverse here. So I think this continues. Ideally, you get a push up to 99s and potentially all the way up here, but your risk is that on Bitcoin. And so I think this is neutral this is just epically neutral. I think it was a good dip buy around 80. Like it's okay. Dip buy around 80. I would prefer deeper. Not enough to entice me, but you know, is what it is. I think it's fine. But I think it's on the mend long term. Ethereum, similar but not. Ethereum did get the dip that was discounted, like a very solid discounted dip. And I think that was good. This one here, we are here. I shouldn't use that. Let me go on a weekly. So we are here on Ethereum. And I think this is the broader view, as you can see it, right? So I think this dip was good, and especially from a technical area. Boom, 26.35, multiple confluences here. This needs to get up over 3170. Over 3170s, look, we're going to 35, end of story. No, like no question here. Oh, higher than 35 probably. And that is what it is. I don't think there's any question in this scenario. As we traverse this area though, what's somewhat bullish here is that, similar to the market itself, a lot of the shorts are getting the opportunity to cover, like meaning get long. And like a lot of the bears are being given the opportunity to get long. And I think that sets up for a better push later on. Just so we're super clear, this in between these two white lines is where Ethereum lives. That's where it lives. I don't think that, so a dip buy still is fine, but I think it consolidates in this area. Upside is like 35-ish, 37s, something like that. But I don't see it breaking out further than that. Just you're not breaking out further than that until we're well above like 4,100. So those are your break levels. And so the break levels are like well over here, up that way. Then you could say, okay, we're going up and to the right, or down here. Okay, you can say we're going to get another deep discounted buy. But inside this box, where it is, where it lives, is constructive, bullish, like consolidation, giving like bears an opportunity to cover their shorts and get long. I think Bitcoin's very similar, but didn't pull back nearly as much as Ethereum did. So therefore, Ethereum became a better buy. If we do get a big rally into Q1, Q2 of next year, Ethereum's going to outperform this Bitcoin. Solana is going to outperform Ethereum. Avalanche is going to outperform Solana. This is just how it works. I'm not going to go into that, but that's just how it is. And it usually sets up this. So Ethereum should double the returns of Bitcoin in a bull market press. And that's just how it always has been. So hence the better dip buy from here. And that takes us to BMNR, which is so funny of a chart. But also why you're seeing a little bit more hold, right? So 27s was that low here. I think you can use that relative low. 24s gap. Are we out of the weeds? No, we're not out of the weeds. But this into 38s is the first stop, right? And so even if it got to 40, still no, not out of the weeds. This is your upside. Am I looking at the right ticker? BMNR. I see. All right. And the breakdown, we were here. That was the trajectory of BMNR. So you had a play in time, broke down. You can get all the way back to 56s on this guy. anything before historical data on this chart doesn't really count. But all of this counts. You're using this. This is a little liquidity gap extension here. I think you can pull back and you can see 30s and this still be perfectly fine. But no, you should not get over your skis on this kind of setup. You're over the 20. I just threw my SMAs and volume profiles on. You can hold here. Pullbacks should be shallower. If you have too high, like if your optimism is too aggressive on BMNR, I'm cautioning that is basically what I'm saying. Ethereum's not breaking out, but it's done going down in the near term from that perspective. It's in consolidation. And so I would expect a very similar thing from BMNR, which means that you can make it from this trajectory up into this one right here. You could get up to 41 here. If you have a cost base of 55, I don't say, you should have listened to the streams when I was yelling 27. If you're going to sit in this kind of a drawdown, you better be buying the dip at that dip, not this dip, but this dip, to make it worth your while. But we can see this pullback here, and we can see it press to 41s. I think we can get to 50 in shorter term like this. And that is a two-step process. That's Ethereum over 35. And so you do have to watch the Ethereum chart. Ethereum over 35, 37, 4,000, you're at $50 for BMNR. At which point, for both of those two things, BMNR and Ethereum, you need to be aware that they ain't out of the weeds yet. It's still very much consolidation. So you're not talking about 100 yet. You would still expect a pullback of some sort like that at that point in time. So TBD, but constructive, 1 foot in front of the other, one step at a time. Policy is going to be important. The yen is going to be important. A lot of those things are going to be important, but it's a big week ahead of us. A lot of things happen. December 19th is the BOJ. And we have NFP, or not NFP, we have FOMC on Wednesday, and I believe that it is, when is the next? And it's the Tuesday after that we have NFP. Yeah, so Tuesday, so it's gonna be like this: Wednesday, non-farm payroll, or Wednesday, FOMC, Tuesday the 16th, non-farm payrolls, and then it's Thursday, December 18th for us, which will be the BOJ update, which is likely going to be a rate increase. And then Thursday, the 18th for us, we have CPI also. So we have a lot of stuff to get through. And yeah, I think that does set up for a bit of a choppy few weeks. But if you're looking for a Santa Claus rally, you're either missed the beginning, or you're too early for the dip into Santa Claus rally, because that dip is on December 26th. But NFP is coming again. We'll have extreme clarity from there, and we will know exactly when and where we're going to go places. And so, yeah, I think it's all good. Some good, some bad. Zero-sum game at the index level. I'm okay. I think we did some really good dip buying, shopping sprees. If we get some really nice sales, guys, follow me. I'm gonna let you know what I'm liking. The last thing I bought was Amazon, but I'm sorry, Microsoft. It's Amazon, then I bought Microsoft. But I still think those two things are gonna be good. And across the board, it's basically like, well, what's on sale today? Today, Apple's not on sale, Google's not on sale, but there are some sales out there. So go shopping and save some cash. But all right, guys, that's it for now. I love you all. I'll see you tomorrow, I believe, on Amit's channel. And yeah, give the show a like, subscribe to the channel if you guys like this stuff. We have some more stuff coming out for you sooner than later too. So keep an eye out for all of those updates. Adios. On to the next one. Peace.